Good morning. I'm Karl Kaufman, and this is the Morning Market Minute for Wednesday, May 25th. Do you know the only thing that gives me pleasure, said John D. Rockefeller? It's to see my dividends coming in. Just as a bird in the hand is worth two in the bush, investors are paying more for a sure thing than the promise of future payouts. In today's Wall Street Journal, a front-page article describes how investors now are placing more importance on dividend stocks over those that buy back their stock. The S&P 500 High Dividend Index, comprised of the 80 highest-yielding companies in the S&P, is up 3.6% this year, while the S&P 500 Buyback Index is down 13%. Dividends are like a steady paycheck from a company as a reward for being a shareholder. The best part? You don't have to get dressed for work, sit in rush hour traffic, or pretend to be busy as the boss walks past your desk. You're the boss, and you get to give the annual or quarterly performance report to see if the company is worth keeping. If you find the right company, you'll receive a yearly raise that outpaces inflation. For my portfolio, I look for companies with a history of growing their dividend payments. How many years in a row has the company increased its dividend? If it's continuously raised the dividend annually for 25 years, the stock is considered a Dividend Aristocrat. There are only about 60 companies in the S&P 500 that qualify. Once a company is on that list, it needs to continue to raise its dividend each year to maintain its status. Dividend Kings have raised their dividends for 50-plus consecutive years. For example, the Tootsie Roll Company has increased its annual dividend for 54 years in a row. If you're an investor in the company, you'll get your dividend payment every quarter and a better dividend every year. It doesn't matter what the market is doing or how many licks it takes you to get to the center of a Tootsie Pop. A company's management often prefers buybacks over dividends. Buybacks reduce a company's share count, which increases earnings per share. Many executives get bonuses based on earnings growth, so buybacks are a sly way of juicing their performance. Management also tends to overpay to buy back their stock. Most executives like to think they can use the business's cash more efficiently than its investors. I prefer that they show me the money. There are only a few executive teams I'd trust spending my money as the business owner for which they're an employee. To quote my grandfather, Richard Goldman, "In God we trust, all others pay cash." I'm Karl Kaufman, and I hope you have a profitable day.